Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Welcome to Trade 31. A few trades back, you might remember that we took an exit right here. Historical exits and entries show up a day, in the next day's candle. So it looks like it made the entry on this day, but it actually, sorry, I said entry. It made the exit on this day, but actually took the exit over here. And then it sat out for a bit. And the following trade, trade 30, we went in at the close of the day on this candle, showing up over here. But we did go in the close of the candle. This is where we're fighting the price a little bit. And the next day it went up and we sat out. Next day it fell down. We were still out. Next day it bounced out a little bit. And we decided to go ahead and make an entry here. So we're going to watch that entry live now. And you can see our order going in, and it is filled, and trade 31 is on. So let's take a look and see what happened over the next couple of days. So I've marked this blue line here for us so we can see that's when the entry was made. And the next day, things look great, much like they did last time. And the time before that, the things were looking pretty good. But the following day, the market really took a big drop down, and we were in negative return territory. So we didn't like that very much. We decided to wait one more day. On the following day, there was, the market gap down here went up pretty good, was looking pretty good, but all in all, fell back down, and Adam decided to take an exit. So we're going to watch that exit live. I will tell you this was another case where the actual trade took a long time. I'm going to speed the whole thing up 16 times just so we don't have to watch it the whole time. But the price ran a little bit, and we were patient for several minutes, maybe 10 minutes or so. And then we decided to make a slight price adjustment, and we went in, or we made that order happen, and the trade is closed, and trade 31 is over. Let's head over to our tracking sheet and see how we're doing. All right, that trade closed on the 18th of September. Yahoo tells us that the S&P 500 SPY derivative was 443.63. A little drop in the year-to-date performance on our buy and hold strategy, down to 16.88. Our trade lost 0.76%, and that brings our year-to-date return to 33.14. We are down from 34 or so percent. And just as a reminder, I've highlighted the top 3 green values in each column. I did the same in here too. And what this is showing us is the last time our buy and hold strategy was at its highest point for the year was back in August. We've been pretty regularly tracking our latest returns, giving us the highest values. Now, of course, if we keep taking losses, that's not going to be the case. But for right now, it is. And ideally, what I'm looking to see is that continue all the way through the year. So we're seeing our highest returns as we make more trades rather than some really big trade that happened, 6 months ago. And now we're just sort of floundering. But our trade percent is 74%, and profit factor 2.52. So those are slightly down for now. Let's head over to our charts. So again, as a reminder, buy and hold year to date on SPY, which is a S&P 500 derivative, is returning 16.88. That's pretty good for year to date return on the stock market. Our strategy, although a little bit down, is still tracking about 33%. We are tracking just short of 2 times our benchmark, the S&P 500. over the last couple of years, you can see what's happened, but just as sort of a catch up, our Adam's been trading the SPY symbol as well. And again, we compare to SSO because we find it gives us the best performance and the best returns. Even in down markets, it's still doing much better than the overall market. And on positive years, it does significantly better. But one thing we did notice was last year trading SPY with Adam's strategy yielded a 10.5% return, positive return in a down market. So that's why it's on the chart as a reminder. It traded 2 times. Adam decided to do 2 trades on SPY. It actually picked up 1.5%, while the SPY buy and hold strategy is down not quite 8%. So it's closing the gap here. And again, trading SPY in a down market seems to provide some good results. But the game we're playing right now is SSO, and right now it's still doing pretty well. And just as a reminder, I've mentioned this in prior videos, I am probably going to be blending these behind the scenes into a portfolio to optimize the return and still try and mitigate risk, because to me that's very important. I do want to try and mitigate the risk as much as possible. So that is the end of this trade. What's going to happen next? We'll have to find out. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.